Welcome to the Wealthsteading Podcast. This is episode 492. Today is September 4th, 2025. I'm your host, John Pugliano. I'm also the founder money manager at investablewealth.com. While the Alphabet Google stock is soaring right now, I say Alphabet Google because I use the names interchangeably. You know what I mean. I'm not telling you to run out and buy it, but let me run through a litany of reasons of why I not only own it, but why it has a larger share than other stocks in my portfolio. And I also want to use this as an opportunity to point out the financial media's bias where they run with a story and treat it like it's gospel, even though it's nothing more than pure speculation. And in the case of Google Alphabet, it also denies the facts. So we'll get into all that. I do want to mention I did send out today a blog post notice, and as I talk about Google today, you can refer back to that post to look at the specific chart. That was the whole reason I sent that out. I wanted you to focus on the chart of Google and its performance over the last year or so. Now, in terms of my blog post notifications, if you haven't received it yet and you're on the list, give it a few hours to propagate through the system because I did just send that out at the same time that this podcast was posted. And you can always go to the website, investablewealth.com, and look under the blog alert notification section, and everything is archived there. If you are subscribed for the free notifications and you're not receiving them, well, the spam filters hate me. So check there, make sure you've whitelisted anything coming from investablewealth.com or wealthsteading.com. And finally, if you've done all those things and you're still not receiving an email notice, well, go ahead and contact me and I'll dig through it and make sure you're on the list. But if you have subscribed to the free notifications, then you should be on the list and it's probably getting stuck in your spam filter. Bottom line on all that is the format has also changed. I no longer send out the entire blog article because a lot of that was one of the reasons why it was getting stuck in spam filters. You're now just receiving the email with the notification, and you have to click the link to go over to the website to actually read the article. Hey, if you don't like that, at the bottom of the email, there's a link where you can unsubscribe. I'm sorry for the inconvenience, but that's the way it's going to be going forward. The biggest complaint I get about the postings are that I don't do it enough. I mean, you can look at the dates of how often these articles appear. I don't think I've done one for 7 weeks or more. And simply because I don't post just to post. I don't create content to create content. If I don't have anything to say, I don't say it. The real advantage, though, to being signed up for those is that that is the first place where I will put up a notice if I've made a major change to my portfolio. You know, if I bought or sold a new stock, it'll go there first. And so consequently, if you email me and ask me what I've bought or if I bought anything, I'm going to ignore that because it's on the website. Anyways, take a look at that post today and notice that chart over the last, say, 18 months or so. In this round of investing in Google, I bought the stock in early May of 2024 when it looked like it was breaking out from a record high. The stock did go on to break out. It continued to put in highs through about the summer of 2024. But then things fell apart. That summer pullback was not limited to Google. If you remember back that far, this is when everyone was all panicked about the rising Japanese yen and the end to the carry trade. And incidentally, so that was over a year ago. Look how much has changed in Japan and specifically with their currency and their interest rates since then. And yet it's had no major impact at all, has it? But I digress. In any case, if you look at that chart, I also have a short-term indicator, a harmonic that I use to track Google stock. And you can see that it looked like in mid to late October, the stock price had gone through a pretty stable consolidation period. And I bought it at that point. No, I didn't get in early September at the lowest point. That wasn't what I was trying to do. I wanted to wait for things to stabilize. So I bought back in, bought an additional position towards the end of October, and the stock broke out again, went on to put in more record highs especially late into 2024 and early 2025. But then if you'll remember, the big panic happened with a lower cost AI alternative coming out of China. That was DeepSeek. Remember what a big panic that put into all the high-tech stocks and the hyperscalers here in the US? Well, the bottom fell out of Alphabet like it did most of the tech stocks. And then, of course, we got into Liberation Day and the tariff tantrum. And the stock plummeted really from February all the way through April 9th or so, along with the rest of the market. You'll notice that I didn't buy any additional Google at that point, not because I didn't have faith in the stock or even because I was overexposed to it, but I'd simply run out of spare cash and didn't have any more money to put into it, or trust me, I would have. The stock price dropped down lower than it had even during the Japanese yen crisis of the previous year. But again, it held pretty close to that short-term harmonic that I track. And what's it done? It's gone on over these past 5 months or so to put in another extreme record high. And I don't think its record high days are over. Now, again, I'm not telling you run out and buy it now on this major breakout, because it has gone up maybe excessively and it needs to take a break and cool off. But unlike so many people, I don't think that Alphabet has lost its mojo. I don't think that it's experiencing a Kodak moment to where it's going to get its lunch eaten by other competitors in the artificial intelligence field. I think it's early days, and I think Google or Alphabet is as well positioned to take advantage of artificial intelligence or whatever other technology is coming down the pike. I think they're in as good of a position as anybody else, if not better, to take advantage of all these advanced technologies. All the hysteria that Google has missed the boat on artificial intelligence, and that Chrome and Google search, all that ad revenue, that it's going to go away forever, I think is pure speculation. I mean, it may obviously get cannibalized either by Alphabet itself or by other competitors. But again, there's nothing to say that Google won't continue to reinvent itself and apply these technologies to the huge installed base of the literally hundreds of millions of users that use its products and services every day. And not only is this just speculation that people act like it's a fact that Chrome search is going to go away, but it defies the reality that we see right now. OpenAI has been around, for almost 3 years now? Google search is still dominant, being used for something like in excess of 90% of all internet searches still. But to the extent that it's going to get eroded by artificial intelligence, or to the fact that maybe it goes away altogether, doesn't negate the powerhouse that Alphabet is in the online advertising arena. Their share of overall online advertising is nowhere near as dominant as it was, say, a decade ago. But they're still growing their profits and their revenue from online advertising. Well, it's because digital advertising itself is growing. And so to the extent that Alphabet has lost share of online digital advertising, it hasn't lost it in the areas where it's dominant. It's lost it in areas where it never had much of a foothold anyways. Things like social media, where like a Facebook dominates, or in pure retail advertising, where a company like Amazon dominates. The point here is that even though Alphabet's total share of online advertising has decreased over the years, the pie is growing at such a rate that they continue to expand and make more money and become incredibly profitable. I think that's what we're going to see with artificial intelligence overall. Consider this too about Alphabet. Even if online searches went away altogether, there are so many other avenues of revenue and profitable growth for Alphabet that it would still be a magnificent company. Let's just look at the YouTube side of Google. You may not realize this, but YouTube is the world's largest and most profitable streaming service. And that's when you measure it in total viewership and time watched. It far surpasses even Netflix. YouTube's monthly active user base is over 2.5 billion. Netflix is only 300 million. And you're saying, well, that's not really apples to apples because Netflix is long format movies and it's primarily subscription based. Okay, well, let's compare it to TikTok. Now, TikTok has had explosive growth, but it still doesn't compare to YouTube. TikTok only has about 1.6 billion monthly users. Again, YouTube, 2.5 billion. Okay, now in terms of revenue, yeah, sure, Netflix, primarily subscription model, has about $40 billion of overall annual revenue from both advertising and, again, primarily subscriptions. Roughly 40 billion. You know what YouTube's is? About 51 billion. And that's revenue which comes from both advertising, primarily advertising, around 36, 37 billion, but their subscription base is growing and it's about 14.5 billion. So still substantially more revenue overall than Netflix. And, something like Disney, which is considered a huge streamer, and hey, by the way, I own both Netflix and Disney stocks, so I'm not putting them down. But Disney is only about 10 billion in streaming revenue. Again, YouTube, over 50 billion. And remember, again, that's only one part of Alphabet, just like the search feature is just one part of Alphabet. Look at Google Cloud. It's the number 3 cloud service just behind Amazon and Microsoft. And look at the devices, right? There's the Pixel phone, Nest, Fitbit. They're moving more into wearables. I think just like Apple, you're going to see them expanding devices with the whole concept of Internet of Things, and especially with fitness and health type products. And Verify, which is a life science and healthcare technology company. And then there's the App Store. And think of the Android operating system. I mean, there's probably something like, 3 billion active Android devices. And beyond that, do you realize that Google is a substantial owner in Waymo, which is an autonomous driving car company, which I think is way ahead of even Tesla? And then there's Google Fiber and Wing, which is a delivery drone service. Right? And I'm just mentioning a few of the top line things. Think of all the Google services that you use that you don't even pay for, which could be monetized or could again be used as a method of collecting data to either market to you or use for some other profit and revenue generating service. Right? There's Google Maps, there's Google Email, there's Google Voice phone service. I mean, Google literally knows virtually everything about people on the planet. What's in their emails, who they're talking to on the phone, what their current location is, what areas do they travel to. All that is monetizable, especially when you factor in how chatbots and AI agents are going to be integrated into these systems. And one final note, this court case, which just got resolved and the primary reason we saw the big surge in the Google stock price, listen, this was predictable. There was virtually no way they were going to break them up. And we know this because we saw the same thing back in the late 1990s with Microsoft. And Google played this, as you would expect, incredibly well. They came at this saying, look, even if you don't break us up, just making us share our data, that's just de facto breakup. Please, please, please don't make us share our data. And what did Shakespeare say? The lady doth protest too much? Listen, sharing the data is not even a smack on the hands. Think of it this way. The data they have to share. First of all, you and I aren't going to get that, right? This is only select participants are going to get the data, which means it's going to be the huge big guys. And they don't get it for free. Google can charge for it. Here's the big part of it. It's also not real-time data. Yeah, they've got to share things about their search algorithm and such, but that information is going to trickle out, probably will come out, who knows, quarterly or something. And in effect, that won't be any more effective than investors that try and trade on 13F filing data. Remember, because it's so old by the time you get it. and also the data is going to be scrubbed. Now, on the surface, they're saying that Google's going to scrub the data, for privacy reasons, so the individual user's data isn't out there and such. But come on, if you're Alphabet, are you telling me they're not going to scrub that data to do their best to not let any new proprietary information get out there, or at least to keep it at a minimum? And then when the select participants get the data and they complain that it isn't complete, Alphabet's going to hide behind the legal statement that it's privacy reasons, and it'll probably get litigated, and that'll be years into the future. Bottom line, Google Chrome search data and their algorithm, even though it has to be shared with other competitors, is still going to give Google the main advantage. Hey, and as far as fundamentals, again, I'm not telling you to run out and buy Google, but even if you did go out and buy it today, it's not a bad deal. It's only trading at a multiple of around 21 times earnings, which is pretty much in line with the overall S&P 500, and certainly a lot less than some of the bigger hyperscaling names. And even at that 21 times earnings, it's got a very substantial 15% growth rate, which again, as good or better than some of the other bigger names you're familiar with. And its bottom line margin is over 30%. So yeah, I think Google is very magnificent, and I think they're going to be that way for a long time to come. Wait, just my thoughts. Until next time, as always, this is John Pugliano wishing you the very best returns.